Welcome to Follow the Money. I'm China Barachina. Here we uncover the stories and strategies of how money really moves. Money isn't just about now, it's about building what lasts. Today on Follow the Money, we are welcoming back one of the country's boldest financial innovators, Jon Lim, CEO and co-founder of DragonFi. When we last spoke, he was shaking up the investing space. Now he's back into a mission to revolutionize how Filipinos think about retirement through PERA, the personal equity and retirement account. From championing financial literacy to bridging the gap between crypto curiosity and long-term investing, Jon Lim is following the money not just for profit, but for purpose, changing the culture of how Filipinos prepare for their financial future. Hi, Jon. Welcome back on Follow the Money.
Hi, China. Thanks for having me again. A lot has happened since last we spoke.
Oh, wow. Can you tell us, ano ba yung tea? What happened? What was the change?
Oh, tea. Okay. Sige. I'll speak like a Gen Z as well. So, since last we spoke, right, we just started as a company at that point in time. Now, we're the fastest growing investment app in the country by way of value traded and, and client acquisition. So, it's actually not even close. If you compare us, benchmark us against the companies that what I call like the neo brokers that started at the same period of time, you'll see the dramatic difference.
Talking about neo brokers, for our viewers right now, can you identify what neo brokers are and versus the traditional ones?
Well, the traditional ones, right? You have obviously the traditional brokers who still execute when their clients call them over the phone.
Okay.
The newer ones, well, the legacy player, which is called financial, they were the ones who revolutionized online investing. But the reason I saw an opportunity to insert myself into the conversation was that the legacy players failed to innovate after their initial disruption.
Oh, okay. That is juicy. Failed to innovate. It's just like, I remember back in the day, like this is phones. This is like outside the trading, but Nokia or BlackBerry. So when you think of following the money, what does that mean to you today as someone steering both financial, to the traditional finance and emerging technologies?
That's a loaded question. I mean, following the money, let's say from example from a personal standpoint, wherein you're talking about investing, is you're trying to optimize the value or the flow of capital and the yield that you obtain from that capital. Whereas following the money from, let's say, a venture building sense is you're seeing where the puck is headed, right? Instead of where the puck has been, and trying to optimize, let's say, for example, the user experience of your target demographic.
What is your most frustrating view that made DragonFi design the way it is today?
Well, a lot, right? So again, if you look at the legacy player, even the online player, they never bothered to iterate on their platform since the day that they launched. Nothing was different. The user experience was dodgy.
Dodgy, huh?
Yeah. It wasn't globally competent if you were to benchmark them relative to, let's say, the global players. And I felt that Filipino investors deserve better, and we've proven it, and our numbers show that we are resonating.
And a lot of like your target markets are actually on the younger age range.
Yep.
Yeah, and you often said that money is energy in motion. That beliefs are, the early lessons shape you, manage and multiply and move it. So how does it shape that belief? Like, can you tell me more about it?
Yeah, so essentially what you said right there, money is motion, right? It just means that money is dynamic. So in that sense, industry is dynamic. So you mentioned that our target audience skews more towards the younger demographic. When I entered the space, that was deemed as negative. Because
why?
The thought process was like, you want the older demographics because in a country such as the Philippines, the older demographics, they control most of the wealth. But the older demographics, they're old for a reason, and essentially, they give way to the next generation. That's why in the US, you often hear about the $150 trillion generational wealth transfer from the baby boomers down to the millennials and Gen Zs.
Do you see that happening right now?
Oh,
the wealth transfer
definitely.
here in the Philippines?
Yep. Whether it happens, let's say for example, obviously the average working age population of the Philippines is way younger than, let's say, the developed markets, right? But even if you say it's 10 years younger, it is going to happen. The shift is going to happen. So even if, let's say, the older demographics, they don't want to embrace the more modern UI, the more modern user interface for one reason or another, I don't know why, it doesn't matter. It's still going to be passed on to the next generation. And people such as Dragonfly, wherein we really optimize for user experience. And our mantra in the firm is really we try to lead with product velocity and innovation. We try to launch a new feature every 2 months or less.
Oh,
if
wow.
you see our platform from when we launched like 2 years ago to what it is today, there's a dramatic difference. You'll see a dramatic delta in terms of what it is today versus what it was 2 years ago.
Do you think that innovation creates more power in terms of marketing and spreading the word of the ease of using a certain app versus like just remaining and making it more particular to the users? Like, how do you weigh that and then balance it?
That's an excellent question. And the reason that's an excellent question is I found through iteration and through empirical evidence that nothing markets the product or the service or the brand more than product innovation and product velocity. So you can do whatever you want. You can, let's say, do ads, performance marketing. You can spend as much as you want. But if the product does not stand on a bedrock wherein it is resonating, there's no product market fit with the current generation or the target audience, it doesn't matter how much you spend on marketing. So from my point of view, we spend all our resources on just iterating and iterating. I'm telling you, a year from now, Dragonfly will look dramatically different from the way it is. So we've over the past 2 years, we've actually launched a lot of first-to-market innovation that the market was sleeping on. I can't believe that Dragonfly, for example, is the first and only broker-dealer with a full-fledged API technology that allows embedded finance. I can't believe, for example, that Dragonfly is the only broker-dealer that's approved for eKYC. I can't believe that Dragonfly is the only
Wow.
broker-dealer that actually pursued, and we were the ones to really help push along PERA within the SEC framework.
Let's talk about PERA. You've positioned Dragonfly as the first SEC-accredited PERA administrator. What made you bet big on the retirement, not exactly most glamorous side of investing?
So what people don't know is that when we launched Dragonfly, they assumed we were just trying to make a better mousetrap than the legacy players. But what they didn't realize back then, Dragonfly was actually conceptualized and incorporated for PERA. So when we incorporated Dragonfly, when we got the broker-dealer license, which was paramount to applying for a PERA license, we saw that the SEC had not finished the implementing rules and regulations. And Dragonfly was the one that really encouraged our regulators in tandem with the BSP to help push it along. And for me, PERA was 19 years in the making. I think I mentioned this to you like a year back, right?
Yeah.
It was 19 years in the making for me because in 2006, when I applied for my MBA to the University of Chicago, I made my whole application centered around retirement accounts because I was already hearing the rumblings of the PERA Act being formulated in Congress.
We have talked about this, one of my guests before, Christian D, that I was wondering, how come, for the viewers' information, can you give us a bit of like an overview what PERA law is, and how is it going to be beneficial to like all Filipino investors?
So in a nutshell, PERA is just like the 401ks of the Americans. I think
that's
most
the
Filipinos would even relate more to the 401ks than to PERA. They don't know what PERA is. And there's a reason for that. All right, so PERA was enacted into law in 2008. That's why it's called PERA Act of 2008. The implementing rules and regulations from the BSP side were completed in 2016. So they launched it with the two of the biggest banks, BDO and BPI. But those banks, for them, PERA was an afterthought. They were making so much money with lending, it was an afterthought for them. They didn't even bother creating an app for PERA.
It was just there.
It was just there, and in order for you to have a PERA account, you had to go to a BPI and BDO branch to sign a paper application.
And then how much does it a person take to start PERA? There used to be?
There used to be, there's no minimum. There's no minimum. There's just a maximum. It used to be 100,000, but now it's been scaled up to 200,000 per Filipino per annum. For OFWs, it's 400,000.
And where is what is lacking? What is the gap? How come there are so many Filipinos that doesn't know about PERA?
Yeah, so it goes back to what I mentioned earlier, that the legacy administrators, the PERA administrators that tried to drive adoption did not bother to lean in with cutting-edge technology.
Because there's not so much profit.
Yep, there's not so much profit, so they didn't want to invest. It's a typical innovator's dilemma, right? What do you do? I have a legacy business. Do I invest in this potential greenfield enterprise? So in their case, they never bothered to invest. Secondly, communication was lacking. It was not disseminated. The information on PERA was not disseminated well.
I believe so too.
Yeah.
What gap did you see in how Filipinos prepare for retirement that made you think this is where we can make the difference?
So the gap is huge. As I mentioned, 19 years ago, I made PERA the centerpiece of my MBA application. But admittedly, back then, I was only looking at the capital markets aspect of things. So my career was, I was a prop trader for the US markets, and I saw how their own PERA, their 401ks, Roth IRAs, essentially the family of individual retirement accounts, how it developed the capital markets and really democratized not just investing, but democratized actual economic opportunities in the form of entrepreneurial risk-taking. So that's what happened in America. And that's what I saw. And I said, that's exactly what the Philippines needed, not just from the investing standpoint. I wanted to help democratize entrepreneurial risk-taking for Filipinos such as myself who did not inherit anything from the previous generation.
Nice one, John. We'll talk more about that. We're just warming up. Follow the Money returns after a short break. Welcome back to Follow the Money. Still with us is Jon Lim, CEO and co-founder of DragonFi. So we want to talk more about PERA because we want people to understand. And, how does DragonFi perform that role, including PERA in the platform, making retirement more accessible for everyday Filipinos?
So again, we utilize technology. So the first two PERA administrators, the banks, they never bothered to utilize the Banco Central PERASys APIs. So that made PERA, applying for PERA, a PERA account, a manual process. In our case, it's in keeping with everything that we do in DragonFi is technology-centric. So in DragonFi, we actually launched a few months ago something that was such a big hit to our users. We launched single sign-on multiple accounts. So basically, you can duplicate your account, create multiple accounts wherein you are the primary account holder. So essentially you're toggling from one account to another. You're logging in using your Face ID. So the reason we did that was in preparation for PERA. Because now you can manage your regular investing account
in one
and your PERA account and future accounts in the future What my goal is to make DragonFi the only investment app that a Filipino would ever need to manage all their investments.
Do you say that because you are also looking at expanding more than the equities market?
Yes.
Okay.
I can't reveal too much, but as I mentioned, we're going after everything. We're going after every financial market that matters to Filipinos.
I'm also wondering because I know it's I've already also had an experience about the how SEC is being conservative on applying new technologies. And given that this is your first dibs, I know that the first two major banks already had this. But what was your struggle and challenge when you were applying this for the first time as a brokerage?
So my challenge was that if you look at our government, right? Every institution operates in silos. Let's say, for example, PERA, it requires an interagency collaboration, right? The BIR, they have their ask regarding PERA. They have their motivations regarding PERA. But then the SEC and the BSP, they have their own motivations for why they want to pursue PERA. But the issue here is I feel that although they communicate, there is no unifying body that has the final say. Let's say, for example, for taxes pertaining to PERA, which I feel is a big miss.
I was about to
I'll
ask.
talk about that later. But for example, for PERA, for taxes, which I felt was a big miss on the part of the authors of PERA. The BIR, in the end, has final say with tax-related issues pertaining to PERA. But I feel the way you come up with the best legislation is for the BIR to give their inputs, the BSP to give their inputs, the SEC to give their inputs, and there's a final decision maker. Whether it be, like, for example, the Department of Finance, who says, okay, I've heard all your arguments, and this is what I believe will optimize PERA. I feel if we had done that, we would have seen that the way to go was just to follow the 401ks of the US, wherein every American has the right to put $22,000 in their PERA tax-free. In our case, we made PERA, in order for it to be tax-free from the standpoint of the employee, it has to be a corporate contribution. And by doing so it's no longer cost neutral from the part of the employers. And if it's not cost neutral from the part of the employers, then how can it gain traction? Because in reality, the cost of doing business in the Philippines is one of the highest in the world.
Grabe, no?
Right? The cost of doing business in the Philippines is one of the highest in the world. So if you're not going to make something as important as retirement accounts cost neutral for the employer, then that's an issue. That should have been the starting gate. That should have, and we needed, as I said, a central body that is the final arbiter.
The final say.
The final arbiter in competing interests in a particular policy.
Yeah, I've seen like one of the factors that we are so slow in our financial instrument growth is because of like, we know that we are being conservative in terms of like, protecting our investors. But I do see that there is a need or a challenge that, to be sent to the governing bodies that that we need to grow and be, nakita natin we're kulelat na in terms of like the volume but how much more? I mean, one more thing, like the policies that has been accepted, like for example, the short selling. Is it something that you think we are ready, or what do you think of fractionalization? I mean, these things are the things that can be a catalyst or a drive for volume. What do you think about it?
So everything that you've said, I'll tackle them one by one. But the issue that I have with all those initiatives, the intention of those are to deepen the capital markets, to drive liquidity, right? But they don't actually address the heart of the matter. And the heart of the matter is covetability and demand, right? So, for example, short selling, that's a good place to start. There's a rule. If you are a financial market participant, there's this adage that goes by, you never short an illiquid market.
Yeah.
So they introduced short selling to an illiquid market.
The timing is bad.
Horrible. Secondly, if you're going to have short selling, you have to do it in a programmatic fashion. You need API technology so that, the way it's implemented right now, you have to reserve your shares in order to short. So you have to make a phone call.
It's manual.
It's still a manual process. And so that may work for institutional investors. And I feel that was probably the target. But as I said, if you short an illiquid market, you get a GameStop situation.
Oh, yeah. Yes,
You
definitely.
get a GameStop situation.
Definitely.
And that's what I'm saying. Like, in order to make these policies, you need domain expertise to understand what policies will work, what policies won't work. And short selling was the worst. Fractionalization. Okay. A lot of people, they look outside the Philippines. Let's say, for example, the US markets. They see fractionalization. We don't need fractionalization.
We don't need
We don't need
fractionalization.
fractionalization.
Why?
Because in order to have fractionalization, this is what outsiders outside of the industries don't understand. In order to implement fractionalization, you need the technology for fractionalization, and you need market makers.
For the viewers right now, fractionalization is actually buying a fraction of the share, less than one share.
Correct.
Diba? That's what's going on in the US. That you can buy, for example, it's a $1 worth of Facebook share. So you can do that, not even into one share. But what do you think is more applicable in this market?
What's more applicable in this market is just make the lot sizes one
Smaller.
share. Just one share. And I know there's a move to do so, but I've heard that since we started DragonFi, it's been 3 years. So as I said, we need to have...
So who do you think is lagging? There are a lot of regulatory bodies in the investing industry, but who do you think is lagging or not aligning? Like we have the PSE, we have the SEC. I mean, who do you think is lagging when it comes to thinking ahead or forward?
I'm not going to point at one. I'm not going to point at one. I'm just going to say that as an industry, we need feet to the fire. We need to act with desperation because
we're already in desperate times.
Desperate times, exactly. We need feet to the fire. That's what I'm saying.
And finally, Jon, I hope we have more time. We can have a part 2 of this. When you hear the words "follow the money," where is your personal North Star leading you next?
Oh, okay. Actually, that's an easy question. All right. AI, right? Invest in AI. And I'll tell you why. So I started my investing career in November of 2000. So I actually was able to experience the dot-com bust.
Oh, yeah.
Which led to the reemergence and the emergence of heavyweights such as Facebook, Netflix, Amazon, right? And people always compare the current landscape to that time period. But that comparison is false. Why? Okay, the NVIDIA of that era, the NVIDIA of that era in 2000 was Cisco. So Cisco was building the pipes and for the internet, right? At that point in time, Cisco was valued at 100 times PE.
Okay.
NVIDIA is currently valued as 35 times forward PE.
Layo.
So that is not a nice comparison, right? Secondly, in the 2000s, in the dot-com boom, it was led by microcaps, flowers.com, pets.com, things that are no longer here today. Right now, it's led by the hyperscalers, which have cash flows that are bigger than sovereign nations. So you're talking about the Meta, the Amazons, the NVIDIA, of the world. Okay, that's one. Do I have time for
Last,
I have two more.
Two more.
Second
Quick lang.
is gold. Gold.
Gold. Okay, gold.
So the whole world is spending like mad. All the governments are spending like mad.
Buying gold.
No, printing money.
Yeah,
so,
printing money. Yeah.
Printing money. So deficit spending worldwide. It's a drug that the whole world can't get out of. So you need gold as a hedge. Lastly, you need private assets. And this is something that I believe that Filipinos can take advantage of, and I hope that there will be avenues for investments in private equity and private credit. The reason being, you look at the US, this is not from my data, this is from Larry Fink, the CEO of BlackRock. 81% of companies that have revenues of $100 million or more per annum are private. In Europe, in the UK, that's 90%. Companies are staying private longer, forgoing public listing. So in order for us to tap that, you want to go to the private markets. So I'm hoping that those three things, AI, gold, private equity, private credit, I think you'll be golden in 10 years.
Thank you, John. That is so insightful. Napakabitin the topic, but thank you so much for your insights. That will be part 2 for sure. All right, thank you. When we talk about investing, it's not just about finding what's cheap, but recognizing true value and long-term potential. As Warren Buffett once said, it's far better to buy a wonderful company at a fair price than fair company at a wonderful price. At the end of the day, building financial empowerment takes vision, discipline, and the courage to merge innovation with strategy. I'm China Barachina. Stay curious, stay sharp, and always follow the money.